Hello, I'm Dr. Lambeau. Let's continue our class. Price patterns are important tools in technical analysis. So today we will cover another price pattern, N pattern, which is an extension of the Dow theory. Generally, a regular N pattern in an uptrend is characterized by a higher peak and a higher trough. An inverted N pattern occurs in a downtrend where the price forms a lower peak and a lower trough. Theoretically, an N pattern that contains more candlesticks and lasts for a longer time sends a stronger signal of a fierce fight between buyers and sellers. Once the price breaks through the letter N, it is a sign of a trending market. Application of N pattern. The N pattern falls into two categories, the N bottom and N head. In a strong downtrend, if the price fails to reach the previous low, it means the downward movement is about to end and the price may rise. Thus, an N bottom pattern may take shape. A long position can be built after the price moves above the previous high.
If you want to watch the full version of the video, you can go to TradingLive or download the TradingLive app. Share it to your friends and learn for free.